Happy Monday, everybody. I hope you had a great weekend. Today is July 1st, 2024. And of course, this is your Monday market update. As we get started in the second half of the year, the third quarter of the year, we have a lot to work on in your plan. And that's the topic of our meetings. And of course, I touch on this as much as I can in the Friday planning videos. There are also a lot of great resources on the website, so check that out as well. As we do every Monday, let's review this past week's action and preview what's coming in today's chopped up week and what it's going to look like. Yes, we have another week with a random off day in the middle. That is Thursday, not really the middle this time, but an Independence Day. Not a random holiday, of course, but a middle of the week market holiday. Can't say I don't like to have the time to have the markets catch their breath, but we'll see how this one goes. Again, markets and offices closed on July 4th, Thursday. Before we dig into the weeks, let's ahead and behind, let's review what we've been watching as the drivers of this market move. Recall, we discussed the expectation of solid growth, and even if it slowed, if it didn't fall off a cliff, check that. Still in place, slowing, but it is in place. Declining inflation, and yes, down from over 9% to close to 3%, still too high, but check that box still too. Also still slowing inflation. I want to remind you that what I've said before, slowing growth of inflation does not bring prices down. They're just going up more slowly. Next, expectations of sooner rather than later Fed rate cuts. This has changed a lot, but it's still true. Not the 6 cuts that we were expecting, but the market's still expecting at least 1, maybe 2. I still think, in my opinion, they will not cut before the election, and I'm still for the 2025 cuts. Finally, AI enthusiasm, and this, of course, is not slowing. The stock growth is starting to look at moving from the great ideas that work phase to the how to convert that to profit phase, and that is for the sellers of the chips and the companies shelling out the billions to actually get those chips. Reminder, this market bottomed out in October 2022, most recently, of course, October 12th to be exact. And since then, through early last week, S&P 500 was up 53% from those lows. A few more fun facts. Through June 18th, according to Bespoke data, the 30 largest S&P 500 stocks had a combined weight of 53% of the S&P 500. In June 99, the dot-com bubble time, the 30 largest made up 42%. 10 of the top 30 now were in the top 30 then also. So let's run down last week now and see what goes on, see what happened. Monday had stocks gap lower at the open with more selling pressure from the mega cap tech stocks, NVIDIA, as well as the rest. In case you heard about this big rebalance of the tech ETF, and NVIDIA having to go from a 5% to like a 20 some odd percent or so weighting, you would think that it would have had NVIDIA surge. And guess what? As I told you before, when you think you've figured out the market in the short term, think again. It changes. Soon after the open, S&P and the NASDAQ went green after the Fed head Goolsbee used the S word, in this case, soft landing. Another Fed head, this time daily, hit the higher for longer note, so markets rolled over again mid-afternoon, and even NVIDIA got in on the action, down over 6.5% on the day, 15% off the recent high. Another fun fact, S&P 500 has lost, NVIDIA has lost about $500 billion in market cap since its high. Only 15 companies in the S&P 500 actually have a market cap of $500 billion. NVIDIA is holding a large influence on the markets, as we've talked about. Markets did close just off the lows. The Dow did make it positive at 0.2%, S&P down 0.33%, and the NASDAQ down a bit over 1%. Stocks opened higher on Tuesday as most of Monday was reversed, most notably mega cap tech, of course, rebounding with a 3% plus early rally in NVIDIA, but the rest of the market gave back gains after a hot CPI print from Canada and some Fed head talk about higher for longer. Sounds familiar. How many times does the same news move markets? We'll just have to see. Dow closed down 0.75%, S&P up 1/3%, and the NASDAQ up 1.25%, with NVIDIA up 7% on the day. See that whipsaw. Now, we did get FedEx earnings after the close as we watched them for how much merchandise they're actually moving. And it was a good report and a good stock reaction, up over 10% after the close on Tuesday. If you thought all of the talk was about AI and NVIDIA, rest assured, the other main topic is weight loss. And Novo Nordisk announced a $4 billion investment in a new plant in North Carolina. Supply is still too slim for demand. They are trying to bulk up the production. They and Lilly are in the sweet spot for the market. Morgan Stanley just forecasted $144 billion in that market by the end of the decade. With markets like this for the year, I do think it's important to compare it all along to other times. For Fed pause times, they're usually good for stocks, and we are now at about 340 days since the July 23rd, 2023 pause. the second longest since 1970, and it's up 20% since then. The longest pause, by the way, was 2006, 2007 at 446 days, and that was a 22.1% gain. We've not had a cut or a hike, for that matter, to stop the count, so we'll see how that goes. Stocks gapped lower again on Wednesday after some global eco data, a hot CPI in Australia this time, and that had global bond yields rising. No major catalyst, but the markets did turn around and turned higher late in the morning, and a 5-year Treasury auction came off well. Solid demand. We're seeing that a lot right now. The big move in FedEx helped the Dow close slightly positive. S&P closed up under 0.25%, and the NASDAQ up 0.5%. Megatech stock of the day was Amazon, up almost 4% on the day. On Thursday, markets opened little change. Yields came down on weak eco data, and soft landing was back in the news. Jobless claims came in at the highest since late of 2021. So maybe the bad news is good news. Mega cap stocks ignored the Micron earnings because they were pretty bad, and Microsoft, Amazon, Google, and Meta all up more than 1%. Nvidia struggled a bit. Fed head Bostic mentioned the first cut coming in Q4, and a solid 7-year auction came off, and that was good also. Before the end of the day, not to be outdone, Fed head Bowman used the H word again. Yes, that's hike. Now, he is out of his lane, or why would he say that? We just don't know. Dow and S&P both up just slightly, and the NASDAQ up about 1/3%. All was waiting on the PCE news on Friday morning. Friday morning brought that eco data that everyone was waiting for. And recall that I said I did not think it was going to be as big of as everyone was making it. PCE and core PCE were all in line with expectations. So markets looking for other reasons to move. The S&P and NASDAQ opened slightly higher and the Dow slightly lower. Nike was a major disappointment in the earnings department. Oil higher on Middle East worries. University of Michigan survey was not much of an event either. With all of the eco news in line, markets were left to close out the month and the quarter with a whimper. The Dow was down about 1/4%, S&P down 1/2%, and the NASDAQ down 0.75%. For the week, all three indices moved a little. For the month of June, 7 positive months out of 8. The Dow was up 1%, S&P up 3.5%, and the NASDAQ was up almost 6%. Finally, for the quarter, the Dow was down 1.75%, the S&P was up almost 4%, the NASDAQ was up 8.25% for the quarter. I'll talk more next week about the stats on what the second half of the year looks like following a good first half. So hint, it is a good history. But of course, we also saw that June was supposed to be bad and it wasn't. Let's preview this coming week. As I mentioned earlier, we'll have 4 or 5 trading days this week. Thursday's an off day and markets close early on Wednesday. This week is the usual jobs week. So that will come Friday. We'll get some important eco data, manufacturing, services, and even housing. We'll get Powell to speak on Tuesday along with JOLTS, and Fed minutes will come out on Wednesday, an early close for markets. Only Fed head on the schedule will be New York Fed President Williams. As we start the second half of the year and the third quarter, it is my opinion that the Fed will stay in the headlines, but markets will really be driven. By that, I mean our focus should be on earnings and valuations. Most importantly, on your goals. As always, we're going to stay laser focused on that and look forward to talking to you about that soon. For now, have a great holiday week and come back on Friday for a planning video and check out the website for the monthly updates. Have a great week.